DSCR with 40-year amortization. Hey, what's going on, everybody? Jeff Trevarthen, Jeff the Mortgage Pro. Hope you guys are doing really well today. Thanks so much for watching my channel. Do me a huge favor. If you like these videos, please go ahead and click that like button down below. And then if you really like the videos, I'd love to have you subscribe. And that way you have a chance to look at the videos when they come out. And if you really like the videos, go ahead and hit that little bell next to it, and that'll alert you when I post a new video. Okay. So thanks again for watching. This really is flattering to me that people actually watch my content, and hopefully you learn something from it. But today we're going to talk about a DSCR amortization that I really like. I just found this out, just recently here. And most of the time for DSCR loans, the amortization is going to be 30 years. Okay. So that keeps the payment at a certain amount. But with a 40-year amortization, this is huge because we can stretch out the time it takes to pay off the loan by an extra 10 years, which in turn typically is going to lower the monthly payment on your mortgage. If your goal is to keep a mortgage for the entire term, then this is probably not the product for you. Okay. But most people understand that at some point they're probably either going to refinance or sell the property over time. So the 40-year amortization just helps with the cash flow in the current state of the property going forward. So I'm not saying this is the end all be all type of amortization, but I think it's really huge in the DSCR investor world because people can actually get lower monthly payments, make sure the property cash flows going forward, because cash flow is really important when you're an investor. And the better this thing is going to cash flow going forward, the better chances of us getting a loan on this type of a property. So 40-year amortization really helps out. Okay. So let's go through some of the guidelines associated with a 40-year amortization type of a loan. So loan amounts can go up to $2 million on this particular product, which is huge. So if you can imagine doing $1 million loan and a 40-year amortization versus a 30-year amortization, you're going to save several $100s just by having a longer amortization going forward. This is for investment properties only because this is a DSCR transaction. So for this type of a one that we're going to work on, investment properties only. This can be for purchases of property. This can be for rate and term refinances and even cash out refinances you can do with this particular product. There's no personal income or employment needed when we're doing a DSCR. And if you don't know, you probably watched some of my videos, hopefully you have, about DSCR. DSCR stands for debt service coverage ratio. And that's the amount of money coming in needs to be greater than the money going out. Okay, so we need to have a 1.0 or greater DSCR. That means that the money coming into the property is going to be $1 more than the expenses of the principal, interest, taxes, and insurance going out. Now, I understand as an investor, there's multiple expenses beyond just the mortgage payment. But for the purposes of doing the loan, the only thing that we are considering is the principal, interest, tax, and insurance. Okay. So don't worry. I know the difference about the amount of money that's going out because you have lots of other expenses associated with owning a property versus just the principal, interest, tax, and insurance. But for the mortgage purposes on the residential DSCR, we're only concerned about the PITI. So 40-year amortization. And again, this is super important because we can get lower monthly payments with a 40-year amortization. And then if we want really low payments, we can do what's called a 40-year amortization with a 10-year interest only. So the rate might be just a little bit higher on the interest only type of a product, but when we're amortizing it over 40 years instead of 30, that means the payment's going to be lower again. So we can really manipulate the numbers here with a 40-year amortization to really make a property cash flow in the case that it doesn't work with a 30-year amortization. So this is just another way to be able to get us a loan on a property that can help us out to improve our cash flow, which I think is super huge and super important in the DSCR world. You can have as little as 3 months reserves. Probably going to need a little bit more than that. Depends on what your credit profile is. Usually 680 or better is kind of what we're looking for. We can do loans a little bit lower in credit score, but for the most part, the terms aren't going to be very good if you are under a 680 credit score. So 680 or better for this. We need up to 80% loan to value. And that means that if we're buying a property, we need to put 20% down to be able to do that. If we're refinancing a property, doing a rate and term refinance into a 40-year amortization because we want to improve the cash flow on the property, we're probably going to need 75 loan to value or 25% equity. And then if we're doing a cash out transaction, we're probably only going to be able to go up to 70% loan to value, or we need at least 30% equity in the property still after you do the cash out. So those are typical guidelines for most investors. They're pretty much the same for this particular type of a lender that's going to give us the 40-year amortization. And I think that's it. I think those are all the bases that we're covering here for the DSCR loan. So if this is something that interests you and you really think that, hey, I might be able to make this work a little bit better with the 40-year amortization, please let me know. I'd love to chat with you about this, and I'd love to be the one that works with you on your DSCR loan here in the United States. If you click on the calendar link down below, you can schedule a call with me, and I'd love to, again, chat with you about doing a DSCR loan with a 40-year amortization. Hope you guys have a great day, and I will see you on the next show. Bye.